Hello traders, you're welcome back to the Forex Geek channel. In this video, we are just going to cover one of the most powerful and simple trading strategies, and that is the three-line strike indicator trading strategy. All right, the three-line strike indicator trading strategy. All right. Now, this strategy has been a favorite among traders due to its ability to highlight key market shifts with remarkable precision. The three-line strike indicator is based on the three-line strike pattern, which is a candlestick pattern that can signal potential reversals or trend continuations. Okay, so this pattern occurs when three consecutive candles align in a particular way, okay, and the fourth candle confirms the pattern, giving a strong signal to enter or exit a trade. In the context of the three-line strike indicator, the indicator helps automate this process by identifying these key candlestick formations in real time. It shows you when the pattern is likely forming, allowing you to act quickly and confidently. All right, now setting up the three-line strike indicator on TradingView is quick and easy. Okay, like I did, just come to the indicator search box, search for the indicator. All right, of course, you're going to find it and then you add it to your chart. Okay, and then once you have added it to your chart, you can decide to modify the settings if you wish. You can adjust the settings according to your trading style. All right, you can adjust according to your trading style, whether you want to show the bearish three-line strike, show the bullish three-line strike, and all of that. Okay, you can see this, so if you want all this to show, you can decide to enable them if you don't want, you can decide to disable. So basically, just check the settings according to your taste. All right, then for the time frames, the three-line strike pattern works best on higher time frames like the 1 hour or the 4-hour charts, but you can also use it on shorter time frames for scalping or day trading. All right, now after the indicator is on your chart, look for the three-line strike pattern to form. Okay, it will typically show up as a strong bullish or bearish signal based on the color of the candlesticks. All right, so the indicator automatically highlights potential trade entries. You can see automatically highlights potential trade entries when the pattern is completed, but it is always a good idea to confirm it with additional analysis or by using other indicators such as moving averages or trend lines. All right, now the three-line strike pattern consists of three candlesticks. The first candlestick is a small body, the second candlestick is a large body, all right, that completely engulfs the first candle. All right, then the third candlestick is a small body that closes within the range of the second candle. Okay, so the fourth candle is where the magic happens. When this candle closes above or below the previous candle, all right, let us so okay, you can use this as an example. I think this should be clear and explanatory. All right, first candle having a small body, second candle having a large body that engulfs the first, and then the third candle has a small body that closes above or below the previous candles, and then it confirms, a small bar that closes within the range. You can see this was a high, but this was a close, right? So it closes within the range of the second candle, right? That's the third candle. You can see the first, second, the third candle closing within the range. This is the close price, closing within the range of the second candle, and then the fourth candle, which is which is going to close above or below the previous candles. In this case, you can see it closed above. All right, it confirms the pattern and signals either a trend continuation or trend reversal. So in this case, we had a continuation. All right, so for a bullish signal, when the third candle closes above the previous two, it suggests bullish trend and you can consider buying. All right, then for a bearish signal, when the third candle closes below the previous two, it indicates a bearish trend and you can consider selling. Meanwhile, this indicator, as you can see, gives you signals that you can take advantage of. So instead of doing all those inner analysis yourself, you can just take advantage of the buy signals and the sell signals painted by the indicator. Okay, now while the three line strike indicator can be highly effective on its own, combining it with other technical indicators can improve its accuracy and reliability. All right, so you can actually decide to use this indicator with moving averages. You can add the 50 period EMA, for example. You can add the 50 period EMA to the chart. All right, so if you add the 50 period EMA to the chart, it can help to confirm the direction of the trend. If the price is above the moving average, focus on buying signals. If the price is below the moving average, you focus on selling signals. All right, then you can also decide to make use of the RSI. That's the relative strength index. All right, you can use the RSI to gauge whether the market is overbought or oversold. All right, combining the three line strike with RSI can help you avoid entering trades at extreme levels, reducing the risk of false signals. Okay, now always take note of key support and resistance levels. They are very important. Take note of key support and resistance levels on your chart. Okay, they're very important. If the three line strike pattern appears near these levels, it adds extra weight to the signal. Okay, now the three line strike indicator trading strategy works well in trending markets where there is a clear direction in price action. It's best used in conjunction with other trend following tools to avoid false signals in choppy or sideways markets. If you are trading Forex, consider using the indicator during the peak trading sessions like the London or New York sessions where volatility is higher. For stocks, you can use it when there is significant price movement, like doing earnings reports or economic announcements. Now, the three line strike indicator trading strategy is a straightforward but highly effective tool for traders looking to predict market movements with high accuracy. By recognizing the candlestick patterns and using the indicator to confirm your entries, you can greatly improve your chances of success in the market. If you found this video helpful, don't forget to like and subscribe for more trading tips and strategies. We'll continue bringing you the best tools and techniques to help you stay ahead of the game. Thank you for watching, and I look forward to seeing you in the next video. Happy trading.